Exchange-traded funds, commonly known as ETFs, offer investors a flexible way to gain exposure to various assets. They trade on stock exchanges, much like individual stocks, allowing for real-time pricing and easy transactions. ETFs typically aim to replicate the performance of specific indices, sectors, or commodities, making them a popular choice for diversifying investment portfolios. The structure of ETFs combines the best aspects of mutual funds and stocks, providing liquidity and lower expense ratios than traditional mutual funds. Investors can select from a wide variety of ETFs, whether they're interested in equities, bonds, or alternative assets. As they comprise a basket of securities, ETFs reduce unsystematic risks associated with single stocks. All in all, ETFs represent an effective strategy for both seasoned and novice investors seeking to navigate the complex financial markets. ETF stands for Exchange Traded Fund. It's a collection of assets like stocks, bonds, or commodities that are traded on an exchange. ETFs are designed to track the performance of a specific market index or sector. How do ETFs work? ETFs are similar to stocks and are traded on exchanges. ETFs are made up of a basket of securities. ETFs are designed to track the performance of a specific market index or sector. ETFs offer investors a diversified portfolio. ETFs are a popular choice for both individual and institutional investors. Benefits of ETFs: ETFs often provide more tax advantages. ETFs can be less expensive to own than mutual funds. ETFs trade continuously throughout exchange hours. ETFs can result in lower taxes from capital gains. Step aside SPDR SP500 ETF Trust SPY. There's a new king in the ETF world. As expected, the Vanguard SP500 ETF VOO saw its net assets under management hit $633. $8 billion on February 18th, says Morningstar Direct. That makes VOO the world's largest ETF, passing up the oldest and previously largest ETF for decades, known best by its symbol, SPY. SPDR SP500 ETF Trust has assets of $632.0 billion. The change-up in the largest fund represents a coming of age of the ETF market. Newer funds are catching on with investors who are more comfortable with ETFs to hold sizable chunks of their portfolios. It's also a sign of how the prices of ETFs continue to fall, making them a smart alternative to owning individual stocks. VOO charges just 0.3% annually, nearly 70% less than the 0.095% SPY charges. VOO gathered a record $116 billion of net inflows in 2024 and has already added $24 billion more to start 2025, says Todd Rosenbluth, head of research for TMX VettaFi. The Vanguard ETF has been gaining share as investors turn to ETFs. What's driving the turnaround? Money continues to pour out of traditional mutual funds and into mostly ETFs that invest their money based on indexes of stocks. Much of that new money is looking for a low-cost indexed home, and Vanguard's VOO ETF fits the bill. Investors yanked an astounding $478 billion out of actively managed funds in the past year, says Morningstar Direct, and $8 billion has come out of active funds in just the past month. It seems like investors finally got the memo that using high-priced funds that hire money managers to pick stocks is nearly always a bad move. And when looking for a place to put the money coming out of mutual funds, fees matter. And here Vanguard's massive size gives it an edge. Just this month, the ETF provider slashed fees on many of its ETFs. VOO is already a low-cost leader for SP500 ETFs. Some investors will start their ETF journey using the largest ETF and build broader portfolios around VOO. This should further help Vanguard gain scale, Rosenbluth said. Other options for owning SP500. But while Vanguard has pulled ahead for the biggest SP500 index ETF, it has plenty of competition. Not far behind is the iShares Core SP500 ETF, IVV, which now has assets of $610.7 billion. And like VOO, IVV only charges 0.03%. And amazingly, the SPDR family of ETFs is undercutting Vanguard on a rival SP500 index fund. Its SPDR portfolio SP500 ETF, SPLG, charges just 0.02% annually. The fund, though, is still catching up in terms of assets. Investors have invested $59.6 billion in the fund. And for some investors, mainly large institutions that need to buy and sell massive numbers of shares at a time, SPY will still play a role, Rosenbluth says. IVV, SPLG, and VOO are all great choices for strategic investors with a long time horizon. The fees are nearly identical, he said. SPY remains the go-to vehicle for those short-term mind tactical investors due to its stronger liquidity. Rampant competition for massive amounts of money flowing into ETFs is only helping investors. A $100,000 portfolio in VOO would only cost investors roughly $30 in the first year in fees. Many active funds would charge $500 or more and offer performance most likely to lag the SP 500.
And yet, SPY will long be known as the ETF that started this investor revolution. This is great sign for further ETF growth that other products emerge as a leader. But SPY will never be forgotten, Rosenbluth said. Much like Babe Ruth, whose records were broken, SPY will remain in the minds as a legend.